Let's talk to Philippe Darvisenet, Global Chief Economist at BNP Paribas in Paris. He's with Elliott Gotkine. Elliott.
Thanks, Owen. Yes, we're going to go through those numbers. Monsieur Darvisenet was expecting 0.2 to 0.3% growth, so I guess he's disappointed too, but let's hear from the man himself. Thanks so much for joining us. What's the cause of this? Why is France slowing down, and should we be concerned?
Well, there was some disappointment with industrial production, but more important, probably, consumption has been very disappointing. I mean, when on quarter-on-quarter basis, consumption has retrenched by 1.8%. So there is not really a surprise. When Bank of France, for instance, and INSEE were expecting 0.2%. These recent indicators tell us that that was maybe a bit optimistic, I would say.
But the key thing here is obviously we were looking at these figures to see if France can remain on track to reduce its budget deficit down to 3% by 2013. Does this mean that perhaps it might have to introduce more austerity measures?
Government forecast for growth was 2% this year. They will have probably to revise it down to somewhere like 1.7, 1.8. And moreover, I should say that indicators for the coming next month, I mean, purchasing manager indices, for example, are not tremendous. So what will happen is that they will increase the severity of their budget, and probably next week they will announce more cutting in tax loopholes.
But here's the problem for France, I suppose many other countries that are on an austerity drive, be it the UK or even the US. They've got to cut the deficit, and they've got to be tougher now because growth is coming in slower, but the economy is slowing anyway. How can France marry those two things together and not risk pushing this economy back into recession?
Well, I think we have a lot of headwinds recently, the financial crisis that we are experiencing, higher oil price, etc. Some of these headwinds are to disappear. So I will not say we will have tremendous growth. There is no miracle, especially with what you said, these austerity programs, but it is inescapable, because if not, you have more turmoil in the market, and what you will not lose on the budget side, you will lose it on the other side. So markets are never happy. We want growth, but also we want consolidation. You give consolidation, they're not happy because there is no growth. There is growth but no consolidation, they're not happy because there is no consolidation. You know?
There's no satisfying some people, but France obviously very keen to keep its AAA credit rating. There were rumours this week that it might lose it. The ratings agency says that's not the case. Yeah. Where does France stand now, given that we've had these lower than expected growth figures?
Two things are important. As opposed to the US, for example, both the government committed so many times that if they don't deliver, it won't be positive for the elections. And what the difference is with the US is that the opposition, Mrs. Aubry or Mr. Hollande, one of them will be the candidate for the opposition, said, okay, we are okay with this 3% target for 2013. So it's a big difference.
But at the same time, just briefly, we do have elections next year. The run-up into elections, not normally the best time for the government to be cutting spending or raising taxes. What's President Sarkozy going to do?
You're sure, that's sure. But there is something new, which is, for months, we have seen headlines with that crisis. And there was a poll recently saying that about 2/3 of the French are now considering this debt issue as a very important issue, which is something very important because the people put fear for their pensions, etc. So it's a new landscape.
Let's talk a bit about borrowing costs here, because France still has its AAA credit rating, but it's the most expensive in terms of yields. It offers the highest yields of any AAA rated country, certainly in the Eurozone. Insurance against default on France's debt also rising. What do you make of what's going on?
Well, yields are not risen. They have declined, much less than Germany, but they have declined. So the money that the interest that they have to pay is lower than the average on the stock of debt. So I would say probably this increase in CDS spread that you mentioned have to do with short selling of government paper.
And so we've seen that there's a ban on short selling of certainly some banks and the like. Do you think that speculators, as you call them, are going to take a step back now?
Well, I mean, they have frozen short selling for some time, like they did in the US 2 years ago. So I think because of that it will cool down. I mean, one must remember that the regulators said to everybody a government paper is something formidable, and now banks are bashed because they are holding government paper.
Well, this is precisely, I mean, Charles Delara from the Institute of International Finance said that this was an overreaction. I mean, is there any suggestion, any justification for thinking that France perhaps could be the next domino to fall in the Eurozone sovereign debt crisis?
I would say two things. One is the kind of path that France has to cross between the primary deficit that we have today and the primary deficit which is necessary to stabilize the debt. It's much lower than what it is in the UK or the US, for instance. And second, there is a strong commitment that if I want to make a comparison for the sake of the argument, if you will, we have a consensus, both on Sarkozy's side and the opposition, regarding the target, which is 3% in deficit in 2 years from now, which is not the case in the US. You hardly have any kind of consensus. You could say, as you suggested earlier, that because there is an election next year, it's not a good time to kind of adopt some more austerity measures, if you will. But at the end of the day, the people now, because of all this turmoil, are very aware that the debt problem is a very serious issue, and abandoning that commitment might be even worse than committing to more austerity.
And of course, we've seen just in the last week or so the European Central Bank coming out and buying Italian and Spanish bonds. Do you think that, can you foresee perhaps the need for it to start buying French bonds? Do you think that there's a possibility that that might be necessary?
Well, I think before that, I think measures that Trichet is hoping for from the government side will be taken. I mean, an improvement in the governance of the Eurozone, which was very, very weak from the start, to be honest.
These are disappointing figures. To what extent are these very worrying figures?
Well, two things, if you will. Bank of France was expecting 0.2%. You say the consensus 0.3%. Of course, it has been disappointing. But one must say, over the last few weeks, we had the clue that this was a bit optimistic because, for instance, consumption had decreased by 1.8% quarter on quarter. So we were expecting probably something wrong. That said, the consequences, of course, together with the indication from PMIs and things like that, are telling us that growth won't be formidable either in the second half of the year, and consequently the government will have to revise down its forecast, which is 2% for the whole year, is somewhere like 1.7, 1.8%. And of course that is an invitation to take more austerity measures when it comes to the budget for next year, and mainly cutting more tax loopholes, if you will.
It's very interesting because as you've been speaking, so has the French Finance Minister, Monsieur Barrois, who has said that there will be no increases in tax, but spending will be reduced and the French fundamentals are stable. Now, as that outlook as we go to the second half, is that something that you agree with?
I mean, when they say no increase in tax, they are talking about the tax rates. I'm talking about closing tax loopholes, and that's in the pipeline, for sure.
Let's go on about the worrisome nature of France and its banks in particular. Do you think, given that all that's gone on in the past few weeks in Europe and America, that France really does deserve its AAA rating?
Well, I mean, as soon as the US have lost it, the community said, well, who's next? One has to consider two things. For the sake of the argument, let's make a comparison. The primary deficit, which is necessary to make sure that the debt is stabilized from now, is much less. I mean, the path you have to cross between now and this necessary deficit or slight surplus is much lower than what it is in the UK or US to begin with. The second thing, which is important and has been stressed by the rating agencies, is the following. There is a consensus between the government and the opposition. I mean, both Mrs. Aubry and Mr. Hollande, who might be the candidates for elections next year, said we are okay with this 3% deficit target in 2013. You hardly have any consensus of that sort in the US for the time being. So there is a path which is clear, a commitment which is clear. The population is very much aware that this debt issue is a serious problem. There is a commitment. Suppose they abandon it, it wouldn't be positive. So the idea that because there is election, you will have to abandon austerity measures, as of today, doesn't seem appropriate.
Okay, Philippe Davizene, thank you so much indeed for joining us. We'll let you get back into the drive. Thank you very much indeed, sir.